My name is Arthur Kwan, and I'm the CEO and co-portfolio manager of a private investment fund focused on the cannabis sector. We got started earlier this year. We have 8 portfolio investments, and I think Jason mentioned TGOD. We were a shareholder of the Green Organic Dutchman, which was a very successful investment for us.
I'm Yasmin Gordon. I've been with Canaccord Genuity, which is one of Canada's largest independent brokerage firms. I've been there for over 16 years. I'm a senior advisor, and I run a fairly interesting business where I combine investment banking alongside investment counsel. I advise Canadian and international institutions, corporations, and high net worth families, and clearly have, due to necessity, have taken a large role as a financier within the cannabis sector.
Hi there, my name is Rosy Mondin. I've been a long-time quiet advocate and consumer of cannabis. I entered the space, I'm a lawyer by trade, criminology background, entered the space officially in 2014 in the ancillary side. Well, a couple of things. Started an industry association to help affect policy decisions at the federal and provincial level. And then from there, I also started, founded a company in the cannabis space on the ancillary side. And what we do is we build and sell extraction equipment. And we also set up processing facilities, and we provide the end delivery consumption devices at the end. Right now we're focused on vape pens. So we are a public company. Apparently I never tout this enough, or ever, but I was the first woman CEO listed on the CSE.
Yay. And what's your nickname? What's your nickname?
Do I have one?
Yeah. Say it.
I'm not saying it. There's many of us. Many Wonder Women and wings.
So I think we're going to start off, we're going to jump right into the financing aspect. We have 2 really unique points of view here on stage today. So I'd like to ask the 2 of you to speak to what types of financings you're seeing. Are they Canadian? Are they US? Are they ancillary? Are they growers? So if you could just speak to, you know, kind of the financings that you've been involved in, or what you're seeing the trend is in the space. And I'll preface that with the fact that, you know, this kind of started about 5 years ago in the capital markets itself, and there has been a dynamic shift year over year in what has been able to raise capital. So I'll let you start, Arthur.
Sure, thanks very much. So we invest across the entire value chain in the cannabis sector. So cultivation, production, extraction, distribution, etc. To date, our 8 investments in the sector have all been Canadian. We have been getting a lot of deal flow in the U.S. You know, we see on average about 5 to 7 private deals a week. So it's, you know, it takes a lot of time to sift through the data, but maybe 1 in 10 or 1 in 15. It sounds interesting enough for us to do a deeper dive in. Currently, we're looking into an edibles business operating in California, looking to come up to Canada. I think, you know, the trend that we're seeing is more and more U.S. companies are looking up north, and you know, Amendment is probably the most famous one, but you know, there's some large U.S. companies looking up north that we're aware of right now. So, you know, that wouldn't be surprised if they come to the capital markets, you know, over the next several months.
Thank you.
I have a unique perspective because of the size of book that I run, and so I have clients, institutional clients that will, and retail, that will focus primarily on the deals that run through the institutional desk at Canaccord. Those tend to be quite large financings, anywhere from 30 million to a couple $100 million that are now being co-led by banks. And then on the other hand, what I really like is that I've got my finger on the pulse in terms of being able to see what trends are developing, because I originate and structure deals that ideally are going to be moved up to the institutional level. So on the institutional side, so sort of those bigger deals, I think that we're seeing Definitely a shift of a de-risking because we have banks and of course we have Sun Life insurance codes that are beginning to back cannabis related treatments. So you're seeing like the large deals get financed and they're bought deals, and there's almost little to no room for retail participation. So I think what's going to happen is you're going to start seeing a shift of a moving down the food chain where I think investment bankers are going to try and find more value. I think that the trends are shifting so quickly. So a few months ago, if you had a standalone LP, there was a very good chance you'd be able to raise significant capital. In the market that we see now, I think that you need to have more on your plate to separate yourself from your peers, so vertical integration is key. So seeing, something that moves from or has the ability to have a variety of platforms from production to distribution.
And what shift are you seeing from the institutional side, if any?
It's been slower. Before, we would see a lot of large deals. A $100 million deal would sell out in 5 minutes, and that was across Canada. Now, it's been interesting. There seems to be a real desire to see better valuations. So there's more of a looking to share structure, making sure that everyone's realizing how much escrowed, what amount of stock is escrowed. So if something's going to be IPOing, how much stock is going to be hitting the market. So there's still demand out there, but I would say it's very selective.
Right. And actually that brings up a really good point, and Arthur, if you wanted to speak to this, or Yasmin, jump in again. I think there's a lot of controversy, there's a lot of curiosity about the valuations that we are seeing. And from what I have been hearing is the valuations are really high. Do you think that's just retail sentiment, that the retail investor is so attracted to the sector right now that the valuations have reflected that?
Yeah, it sort of reminds me of the of the tech boom in the late 90s. When I look at a research report like Cannacord's, for example, there's certain valuation metrics, and it always strikes me as being funny because a lot of the companies listed are pre-revenue or just emerging revenue. So from a valuation standpoint, they look really expensive. But when you look at metrics, 1 year out or 2 years out, and I think in this industry, there's several metrics that are being used out there, including EV to EBITDA, price to revenue, and EV to funded capacity. So when we look at those metrics and compare them to the other peers, they may look expensive as it currently sits, but once a lot of these companies are in their emerging phase, and the bulk of the revenues will come 2 years out. So when we look at those type of revenues, those type of metrics, and compare them to, say, other sectors, then they start to become a little bit more reasonable and a little bit more justifiable. Still expensive, but there's a reason for that.
And Rosy, just from your perspective, since you started this company, you took it public, what has been your experience as far as going out and raising capital? And I say that for the people in the room who, whether you're private or public, at some point you've probably had to go out and get investors to write a check for your business. So how have you gone about it?
Well, I think first and foremost, it's really important, I think, before you go public is to at least be in revenue and have some sort of stream or purchase or something that you can finance on. And before we go public, a lot of people do private placements. That's what we did. We raised about $4 million prior to. We also did a 3-point amalgamation wherein we became a publicly reporting issuer by consolidating with another company that was listed but hadn't been trading. So we did that in 2016, and then from there we did some friends and family financing. Just prior to listing, there was an interest from some brokerage to come in with their friends and family, so we did another 1.4 there. So it was about $4 million pre-listing. Then we got listed in 2017. God, already, it seems like 10 years. 2017. And then basically, because we're in equipment manufacturing, we've been in development most of 2017 and even into the beginning of 2018. Even though we had finalized the development of our machine, we were still running it, going through certification, doing some updating. So it's interesting because definitely I've been an advocate for a very long time. I've been a consumer, and I've always flown under the radar. So definitely being a CEO, you have to put yourself out there. I've been lucky enough to and privileged enough to have a position where I've been also doing a lot of advocacy. So that's given me a platform as well. But getting out there is certainly important. This need for news is certainly important. It's kind of the bane of my existence right now. But you also don't want to do things precipitously. You want to do things properly, and you don't want to come out and shoot yourself and make all these great announcements and then not be able to follow through. So I take the tortoise and the hare approach for sure. I've always said that it's a marathon, not a sprint, and I really like the slow and steady go. Some shareholders might not be happy with that, I understand. We follow the markets, of course, so we had a peak up to 70-80 cents early this year, which is a really nice entry to the year, actually. I thought I could start 2018, just kind of ease into it, and that did not happen at all. It started with calls at 6 in the morning, and I was offered a $5 million bought deal, which was fantastic, especially with the price at the time. And unfortunately, then the markets took a bit of a tumble. It was great for us, though. At the same time, $5 million doesn't sound like a lot in the grand scheme of what's going on, but like I said, we're also slowly ramping up. So before we got listed, a lot of my speaking out as the CEO was all about awareness and raising awareness so that we would be ready when the markets were ready to go, when our equipment was ready to go, and we were actually able to finally really execute on our business plan, which is what we're doing now. So I think our shares cost right now is great value to investors if you want to purchase on the market. The $5 million, like I said, not huge in the grand scheme of things, but for us it was perfect. I don't need to go and blow my brains out and dilute the company either while we're still trying to build, grow, and execute. Staffing up, all of that's happening now. We've got a great cachet in the bank, and we're starting to roll out.
I think that's a really important point because as an exchange, we get really excited by companies going public and raising $145 million oversubscribed. But it's also really important to remember that there's a lot of companies out there that are raising $5, $6, $7 million to go to their next growth phase. And the companies that are raising those money, they're keeping a really tight capital structure, which is best in the end for their investor. So don't be discouraged sometimes by the huge numbers. That's very exciting for us as a stock exchange, but it doesn't mean that you can't go public and raise even $1 million to get you to your next phase. The one other point I wanted to ask you, Rosy, because I think this is incredibly timely with what's just happened in Canada legislatively. You've been heavily involved, and maybe you can tell us a little bit about it. I'm sure most people have some understanding, but more curious about how you feel this will affect the capital markets.
Yeah, that's going to be really interesting. I mean, we're going to have so many more new players coming in, so we're going to definitely have competition. We're actually going to have an industry. I think right now, David, how many licensed producers do we have? 106? 11? So we've been ramping up, but still 111 across Canada really isn't an industry that's just primarily or only in the medical stream. So what I really do see is thousands of applicants across Canada. Right now, it's not even segregated at seed to sale. So we advocated for breaking up of the Cannabis, what's now the Cannabis Act. We're coming. So you can have segmentation of licensing, so it allows for a lot more participants to enter and build out on their specific stream, whether it's a nursery, whether it's a micro category in cultivation or processing, or the standards, whether it's a laboratory. So that's going to bring in a whole lot of competition. I think I keep hearing about market crashes, and I'm not sure about a crash per se, but I think there's going to be a reallocation of the wealth that's out there to a bunch of different companies. And definitely, I mean, I've been doing this for a while in the ancillaries, and it was really funny coming out, like I was saying, the kind of awareness campaign. People thought I was nuts, especially in 2014. We were talking about how it was going to move to oils, and if you just trying to understand the space from cultivation, because that's where all the public companies were, and then in the middle of that, trying to explain to people and educate people on, well, moving bags of weed is moving air, and that's the transportability, the scalability, the shelf life of it. It just did not make sense in a commercial framework. So this industry is moving at light speed. It's going to continue to move at light speed. I think the next 3 years, there's going to be a lot of uncertainty. It's a bit of a shit show, but there's a lot of opportunity that's going to come up. And I just think it's going to continue to grow. And we've got an amazing platform here in Canada to be an international leader on the global scale.
Thank you. We're going to wrap up here in a few minutes, and I'm hoping to give you guys some time for questions, but I did have 3 minutes. Thank you. Thank you. The last question I wanted to ask the whole panel, so let's keep our answers short if we can. If a company was considering going public, do you have any advice? Obviously, there's many different routes to do so. There's things that have worked, there's things that haven't worked. Is there any advice you could give a company that is thinking about that road? I'll start with you, Arthur.
Sure, yeah, I'll make it quick. But, like the person from Macmillan said, you have to have all your ducks in order. So, capital structure, professional advisors, audited financial statements, PIFs, all that has to be in order. My one bit of advice is you think about what your value add is in the public markets and whether you can attract the capital and whether it outweighs the cost of the increased regulatory disclosure reporting requirements.
Thank you. Yasmin?
I think that if someone's planning on going public, what you want to be doing almost immediately is discussing with numerous groups that could help you go public. And I think one of the first conversations is with someone within on the investment side. They can help advise you, and I'm a big believer that you need to have someone that's going to champion your deal in the process, so that's beyond necessary.
Yeah, absolutely. Rosy?
And I would say a strong management company. You can't do it all on your own, 100%. I've got my skill set, and my business partners have theirs, and we've ramped up, of course, with amazing staff. So we always say we're the Avengers. Everyone has their own superpower, and that for sure is so important. And also, when you go public, going public, just managing the public company in and of itself is very time-consuming and regulatory heavy with all the filings, so make sure you've got a good team that's able to do all your regulatory filings and keep up on that for you as well.
That's wonderful. Those actually couldn't be more perfect 3 answers. So we'll wrap it up. Thank you so much, guys, for joining me up here. Is there any questions before we get the hook off stage?
Let's hear it for Anna and everybody one time. First of all, we have time for one brief question. No dissertations, no soliloquies, no monologues. One question right here. Let's go.
What are some metrics that you folks use right now to evaluate companies that are building brands or trying to launch value-add products but may or may not have a business operational and may or may not be looking to expand into the public markets and look for evaluation?
Yeah, maybe I'll start. So that's a really hard, for companies that have revenue and cash flow, we look at EV to EBITDA, price to revenue, and EV to funded capacity for LPs. For companies that are pre-revenue, we typically look at the management team, the IP, and the assets. And it's a rule of thumb. There's no hard metric that we look at, but if we have a good feel for the management team and their capabilities, then that warrants a deeper dive into the investment opportunity.
I would also say, look at the valuation. Your first money is always your hardest and most expensive money that you're getting. You have to talk to at least sometimes 10, 20 people to get one check. So if they're spending, let's say, look at their business plan. If they're sinking primarily 60 or 70% into, a building, rather than putting it into operations, you might have to question their decisions on that, because the acceleration of capital and their amount that they're able to realize on their operations, if they ramp that up well, the ROI on that is a lot higher than trying to get an ROI back on a building, which is, of course, more of a passive asset that takes a long time to get your same percentage back on.
Yeah, I think there's also a couple of options as well. I mean, it's not necessarily that someone has an idea and they want to go public with it. Maybe they want it bought out. So there's always different options and alternatives that you can discuss with one who's got an idea, and looking at where the market's at that point in time and how readily the market will be able to absorb that new idea.
Thank
Great.
you.
Thank you all very much. I wish we had more time because it was fantastic and fascinating.